The agricultural world is witnessing an unprecedented surge in tractor prices. Both new and used tractors are caught in this upward spiral, leaving farmers and industry experts searching for answers. This price surge is not a result of any single factor, but rather a confluence of challenges that have created a perfect storm in the tractor market. From persistent supply chain disruptions to inflated input costs and unwavering demand, multiple forces are driving prices to new heights. Farmers are grappling with sticker shock as they navigate this new reality. The days of easily replacing aging equipment or upgrading to newer models seem like a distant memory. Dealerships are struggling to maintain inventory, and the wait times for new tractors have stretched from months to an indefinite future. This situation underscores the severity of the situation and the pressing need for a deeper understanding of the factors at play. The ramifications of these price hikes are far-reaching, impacting not only farmers' bottom lines but also the entire agricultural landscape. As the backbone of the industry, tractors are essential for virtually every aspect of food production. Their affordability and accessibility directly influence a farm's productivity and profitability. Therefore, this issue demands attention from all stakeholders, from manufacturers and policymakers to farmers themselves. In the following sections, we will delve deeper into each factor contributing to this price surge. By understanding the root causes, we can begin to explore potential solutions and navigate the challenges facing the tractor market today. One of the most significant contributors to the inflated tractor prices is the ongoing global supply chain crisis. The intricate network that underpins the manufacturing and delivery of tractors has been severely disrupted, leading to production delays, shortages, and inevitably higher costs. This crisis, initially triggered by the COVID-19 pandemic, has been further exacerbated by geopolitical events and economic instability. Manufacturers are facing unprecedented challenges in sourcing essential components and raw materials. From semiconductor chips and tires to steel and glass, the list of items in short supply seems endless. These shortages have forced manufacturers to make difficult choices, often leading to production cuts, factory shutdowns, and a backlog of orders that seems impossible to clear. The ripple effects of these disruptions are felt throughout the supply chain. Logistics companies are struggling to keep up with the demand for shipping and transportation, leading to delays and increased costs. Warehouses are overflowing with unfinished goods, waiting for missing parts to arrive. This bottleneck in the supply chain is a major factor driving up the price of tractors and contributing to the overall uncertainty in the market. The agricultural industry relies heavily on the timely delivery of machinery and equipment. The current supply chain crisis has exposed the vulnerabilities of this system and highlighted the need for greater resilience and flexibility. Until these issues are addressed, manufacturers will continue to grapple with production challenges, and farmers will face the consequences of delayed deliveries and inflated prices. Beyond the supply chain bottlenecks, the rising cost of raw materials and manufacturing inputs is another significant factor driving up tractor prices. Steel, a fundamental component in tractor manufacturing, has seen a dramatic price surge in recent years. The global demand for steel has outstripped supply, leading to a price rally that shows no signs of abating. Other essential inputs, such as rubber, plastics, and electronics, have also experienced significant price increases. This widespread inflation in raw material costs has put immense pressure on manufacturers, forcing them to pass on these increased expenses to consumers. As a result, the price tag on a new tractor reflects not only the cost of innovation and technology, but also the inflated price of the materials used to build it. Furthermore, the rising cost of labor and transportation adds another layer of complexity to the equation. The shortage of skilled labor in the manufacturing sector, coupled with increased fuel prices, translates to higher production and delivery costs. These factors, combined with the already inflated input prices, create a challenging environment for manufacturers struggling to maintain profitability while keeping prices competitive. The agricultural industry is caught in a delicate balancing act. Farmers are facing pressure to increase productivity and output to meet the growing global demand for food. However, the rising cost of essential equipment like tractors threatens to undermine their ability to invest in their operations and remain profitable. Addressing the root causes of these input cost increases is crucial for ensuring the long-term sustainability and affordability of agricultural equipment. Despite the soaring prices, the demand for tractors, both new and used, remains remarkably resilient. This seemingly counterintuitive trend can be attributed to several factors, highlighting the essential role of tractors in modern agriculture and the unique economic forces at play. Firstly, the global demand for food continues to rise, driven by population growth and changing dietary preferences. This demand puts pressure on farmers to increase their output, necessitating the use of more efficient and powerful machinery. Tractors are the backbone of modern agriculture, and their role in boosting productivity and efficiency is irreplaceable. Secondly, many farmers are facing a backlog of equipment upgrades and replacements. The economic uncertainty of recent years may have led some farmers to postpone major investments. However, the current high commodity prices offer a financial cushion, encouraging them to finally invest in new or used tractors to improve their operations and capitalize on favorable market conditions. Thirdly, the limited availability of new tractors due to supply chain disruptions has spilled over into the used tractor market. With long wait times for new models, farmers are turning to the used market as an alternative, further driving up demand and prices for pre-owned tractors. This trend highlights the interconnectedness of the new and used equipment markets, and the overall scarcity of tractors in the current environment. The sustained demand for tractors, even at record-high prices, underscores their indispensable role in modern agriculture. As long as the global demand for food continues to grow, and farmers strive to optimize their operations, the desire for reliable and efficient tractors will persist. This unwavering demand, coupled with the supply chain challenges and input cost pressures, suggests that high tractor prices may be the new normal for the foreseeable future.